8 million bitcoins in loss. 46% of the previous bull market wealth annihilated. It has been a horrible, prolonged 2022 bear market. In this video, we're going to analyze some of the on-chain metrics to see what has the trouble been. Is it recoverable? And what is the on-chain data saying? I'm going to share with you exactly what I expect to happen in the next year in terms of on-chain metrics and why I think there could still be some more pain yet to come. Guys, don't forget to smash up the like button. Don't forget to subscribe. Check out the links in the description if you want to buy any cryptocurrency. We're going to get straight into this one. I want to kick off with this chart here. And what this chart is showing you is how many of the Bitcoins, both short-term holders and long-term holders, are currently in a loss. If you look at the red line, those are your short-term holders. And what it's showing you here on the right-hand side is approximately 2 million Bitcoins are sitting in a loss right now. In other words, the price it's trading at right now is lower than the price they have been bought at for short-term holders. Now, you probably say that is expected, right? If you've bought any period over 2022 or even late 2021, you are sitting in a loss because the market has simply declined throughout that period. Now, if you look at the long-term holders, this is where things start to get a little bit more scary. Now, if you look at throughout 2021 and even parts of 2022, the long-term holders were okay. Look at this blue line here. But then as you can see here, as we got to the back end of 2022, when the market was really getting rough and Bitcoin's falling down to 15,500, we've seen how this blue line has spiked. And this is the long-term holders. The long-term holders are now sitting on bags with 6 million Bitcoins showing a loss right now. So in totality, we have 8 million Bitcoins in losses. And for those of you who aren't experienced in a bear market, what does this mean? I want to put this into some sort of a context because that's meaningless if you haven't traded in a crypto bull or bear market before. That's meaningless if you don't know where this bottom could be forming and if you have no way of contextualizing it. So what I want to show you is the following. Let's take a look at this. And I want to talk a little bit about forming a bottom. So what this is showing you, the black is the Bitcoin price, the pink is the price drawdown from all-time highs. Now, if you look at the percentages here, I want you to focus on the percentages on the left-hand scale. This percentage, this line here, where my cursor is right now, is a 75% drawdown. Okay, in other words, where we currently are at is a 75% drawdown from all-time high. Now, of course, in a dollar amount, our drawdown is higher than ever before. We'll come onto that shortly. But we have to look at this as a percentage. From all-time high down to where you fall, for example, the previous cycle. All-time high of about roughly 20 and the lows of around that 3,500, 4,000 range, right? So your retracement here was far greater. It was closer to 80, 85%. If you go down to the previous cycle before that, the bear market 2015, 2016, even lower, right? And if you go down to one previously in 2012, you can see you're closer to 100% drawdown in these periods, okay? So what this diagram is showing you is that the retracements from all-time highs are getting shorter in every cycle. But it also means there's a little bit more room for it to go before we start panicking. Okay, now you can see why a lot of people are calling for a bottom, because if you draw a trend line across this, if you were to draw a trend line taking all of these bottoms, you'd expect us to be bottomed out around now. The Bitcoin market's more mature. You can make the arguments for, you know, these some people were even at the time saying, oh, we're going to go straight into a super cycle and not have a bear market. That was proven wrong. But you can make the argument that we're more mature now, and therefore I wouldn't expect us to retrace anywhere, not anywhere near, but wouldn't expect us to retrace to the same levels as previous bear markets, right? We don't necessarily need an 85%. But what I would say is that 80 to 85% mark is something I would be stress testing. If I was a business like Binance or even for my own portfolio, I always stress test to 85% because history has shown us that crypto is able to retrace that far down. That is why when I see FTX collapse, I see Voyager, I see Three Arrows Capital, if I was any of those businesses in my risk management team, we'd be stress testing for an 85% retracement. Our business has to work on 85% retracements. If it doesn't, then we don't have a crypto business because crypto has shown itself to have that kind of a volatility in its 4-year cycles. Similarly, for my portfolio, if I'm buying, I need to be happy with an 85% drawdown. Okay, if I'm not happy with an 85% drawdown from all-time high, then I don't have enough conviction. I shouldn't technically be buying. Okay, that's my rationale when I'm investing in crypto. So just to show you this is to say, look, we're not out of the realms of the ordinary. I think sometimes when you get caught up in the FUD of FTX and all these other things, it's been a tough year. Sometimes we can think crypto is doing something abnormal. But what I can assure you is it's definitely within the realms of normal. And in fact, which will surprise a lot of people, the retracement is less than previous cycles before. So on a percentage basis, the pain has been a lot less, a lot more in previous cycles. It just feels like a lot more because crypto has this mass adoption now, and the dollar amount and the global effect of it is getting bigger. And that's going to get bigger and bigger with each cycle. What's then going to be interesting is let's take a look at the Bitcoin yearly sum of realized profit and loss. And what I want to emphasize here is twofold. Let's go back to the previous cycle. We go to the 2018-2019 bear market. And in fact, let's go to the bull market before that. So the 2017 to 2018 period, you had your bull market, right? And you ran up all the way here, up to that 20,000 level we were speaking about. We've spoken about this a lot of times. It's just behind my head there. No need to pop me out of the way. We just leave that there. So just here, we got 20,000. And in that cycle, we created $117 billion of profit. That's this green area, right? If you take the integration of this, if you take the area here, that is 117 billion in profits, the area under that curve. Now, what I want you then to do is progress the timeline forward. And in the ensuing bear market that followed that bull market, we realized $56 billion of losses. If you take that as a percentage of the 117 that you made, you are sitting at just shy of a 48% wipeout of the total profits made in the previous cycle. And we know this is what crypto's about, right? Massive, crazy bull runs, give a lot of it back up, and then you go wait for your next bull runs, right? That's the cyclical nature of crypto. Now let's fast forward that analysis to what we're seeing now. And what we're seeing now is in the 2020 to 2021 bull market, when interest rates were low and the government were printing money and everything was green, we ran into a crazy bull market, which first took us to 64. We cooled down to 29, which we thought we were going to run into our bear market. And you got one final rally to 69, which in hindsight has just been everybody dumping their bags, right? The long-term holders were dumping their bags on this second run up. And then we've had our prolonged bear market to the downside. But in that bull market, $455 billion of profit were created. Okay, so almost 4 times what was created in the previous cycle. That's huge growth in one cycle. Now, similarly, look at the losses now in this bear market. In this bear market, we have now seen $213 billion of losses. Okay, if you take the percentage of that, just like we did, we're sitting at 46%. Okay, so very similar to the 47.9, 48% we see in the previous cycle. So we're pretty much getting there, right? If you look at it in these different metrics, like I showed you from percentage drawdown, one thing is for sure. We're closer to the bottom than we think we are. And a lot of these people who are calling for 2,000 Bitcoin, Bitcoin's dead, 5,000, 6,000, just shouting out random numbers, they're not actually being data-led. They're not actually looking at the data. What have the previous cycle shown us? And therefore, what is the context and what is most likely probability of what's going to happen? So just wanted to bring that to your attention as well. Also interesting to look at is the profit and loss by return bands. And what I want to show you here, these are all long-term holders, by the way. This analysis was done on long-term holders. And what you can see here is the spike in drawdowns we have seen in terms of realized loss here is on par with only very special moments. If you look at these spikes and the levels we've hit here at minus 0.1, what this means is minus 0.1 is every day you are realizing a loss of minus 0.1% of Bitcoin's market cap. Okay, that's a lot. And that's only happened on a couple of instances. It happened in the 2015 bear market here. It happened in the 2018-2019 bear market, which we just studied. Okay, it happened here earlier this year, and it happened again in this period. So that is why a lot of people are a little bit nervous, because normally it happens at the peak of the bear market, and then things get better. If you look at this, they realize it gets to this worst period here, and then it gets better. In our instance, we had it twice. One because of Terra Luna, and 2 because of the FTX saga, which we've just kind of walked through here recently. So we've got this double whammy, double spike effect, which we haven't seen in previous cycles. And this is part of the reason we're seeing a lot of pain at the moment in the markets. I want to share a bit of positive news, which is let's look at the total supply held by long-term holders. Now, when we look at the total supply held by long-term holders, you'll notice one thing, and that's the orange line there. And that orange line there has continued to climb. Okay, they are currently holding 13.9 million Bitcoin, which is 72.3% of the circulating supply. Guys, let's put that into context. 72.3% of the circulating supply are held by long-term holders. Now, why is this important, some of you will be thinking? Well, we need to understand, what is the premise of a long-term holder? Why is it important that long-term holders are holding crypto coins? Because long-term holders, by definition, have a different mindset when it comes to holding crypto. I'd consider myself a long-term holder. When I make Bitcoin purchases, I make Bitcoin purchases having no intention to sell for many years. I'm buying the coins, I'm taking them off the exchange, I'm putting them into cold storage, and I couldn't really care less what happens intra-year. I care over the long term and over multiple cycles. In fact, my thesis is if our belief and conviction in Bitcoin is right, we should never need to spend the Bitcoin. We'll simply be spending off of it or some other cryptocurrencies like Ethereum going into the future, right? So you should never need to come back to fiat in certain instances. And that is why it's fantastic news that 72.3% of the supply is being held by long-term holders. More importantly than that, not only are they holding, but they're continuing to increase their percentage. Throughout this bear market, they are still at all-time highs. They've not been shaken. They've not panicked. In fact, they've seen it as the opposite. They understand, because long-term holders are the ones that have generally been through previous bear and bull markets. And they understand that this is the moment to be accumulating. These are the moments to be buying. And that is why their percentage being held continues to climb. Now, there's also a double whammy effect, right? And the double whammy effect is that short-term holders in these types of markets panic. And they panic hugely. Right? So when the market's not going their way, these short-term holders sell. Let's say you were in November, you were buying crypto at 69,000 and suddenly halfway through 2022, you were sitting on a huge bag because Bitcoin's dropped down below 30, etc. Right? Those are the wallets that are selling to somebody like myself or somebody else who has a more long-term view on Bitcoin, who is buying the Bitcoin up at 16,000, 17,000, 18,000, 19,000, taking it all up and looking to hold for many, many years. So you're getting this double whammy effect where not only are long-term holders looking to increase their bags, but short-term holders are giving up their bags to long-term holders, and therefore the percentage of long-term holders is increasing. Either way, it's good for the long-term run of Bitcoin because long-term holders by definition are not the ones who want to sell. They want to hodl, they want to accumulate, and they want more Bitcoin, which is good for the Bitcoin price because what it means is when you finally do have a resurgence back up to 30, 40, etc., you're less likely to have these big dumps to the downside because the majority of people holding have that long-term view. And last but not least, I wanted to share this with you. And I actually pulled this chart from earlier in the year because this is something I was sharing with you at the time and I just wanted to reflect on it and share it again. At the time, we were sitting at about 22,000 in realized price, okay? So Bitcoin was sitting at this range and I remember sharing a video with you guys to say, I feel like there's more downside. And I shared this pricing model with you, and there's a few different pricing models to give you the exact level. And the first level was the balance price. And we went through this on a separate video. It's basically your realized price minus your transfer price. And it gives you a price point of 17,545. And that's the pink line. And historically, if you look at it in the previous bear market, you rode along this pink line for quite a while. Similarly, you came close to it here in this dip, and then you ran back up. And that's why I was thinking, okay, this is a sensible level for us to hover around. Now, since then, that has actually played out, right? We've hovered quite a while at that 17,600 level, which I've been talking about. In fact, that was our June low when we fell from the Terra Luna collapse. Let's take a look. I'm sitting here on the Bitcoin chart on the weekly. And what is the significance of this 14,000 level from a technical analysis? I've just shown you from on-chain metrics why it's important. What about technicals? Well, as you can see, earlier in the year, we failed to hold support around the previous all-time high from the previous bull cycle. Now that level was 20,000. We were unable to hold it. Now, when you look at the previous cycle, you run up to 20, you fell all the way down to 3-ish, and then when did you run up to? You ran all the way up to this range at 14,000, 13,800 to 14,000. So now the question, even from a support level, is this going to be our support? If I bring back out my lines, is this green line here going to act as support for us as we move to the downside? Is that our final capitulation level at that 14,000 level? Or is that going to line up nicely with our delta price? And that's what's interesting. It's no coincidence that this 14,000 price could be our final capitulation level. So just wanted to share that with you guys. Hopefully that is fairly useful. So however you look at it, crypto has been in for a hell of a ride throughout 2022. We have seen huge amounts of wealth lost in terms of unrealized loss and realized losses as well, as many have capitulated during a bear market. But this is absolutely normal. This is not without the realms of normality in the crypto space. You know, when you decide to invest in crypto, you're investing in arguably the most volatile asset class ever known to man. So to not do your research, to not expect the kind of retracements you have seen in previous bear markets is somewhat negligent, right? We should expect that. If we're investing in crypto, how is it we're not okay with 80% drawdowns? In fact, what I'm saying here is we've only seen a 75% drawdown. So my message for the lot of people who are throwing their toys out of the pram, who are saying they don't believe in crypto is a scam, what are you looking at? Because the data has always shown we've had these massive drawdowns from all-time highs. And our drawdown is within the same proportions that we've seen in previous markets. Arguably, you've got more room to fall. As I shared with you on the Delta price, I shared with you percentage retracements. Yes, we've seen 46% of the previous bull market wealth wiped out, but it was 48% in the previous cycle. So again, all within the normal realms of metrics. Now, as you can see, Bitcoin is hugely sideways right now. The pre-market is showing a little bit of green as we head into the final 4 trading days of 2022. And I won't say I'm going to miss 2022 in any hurry, but at the same time, I'm not expecting roses to be welcoming us on the gates of the 1st of January. So make sure you go watch my video from earlier yesterday when I explained exactly what it means in terms of a recession and what I think could be happening in terms of cryptos as well. But I also want to show you here that the Fear and Greed Index is sitting at 27. Markets are feeling okay. Remember, this has been as low as 8, 9. So I don't want people to think that, you know, we're in a huge, horrible situation right now. No, we're sitting at 27 on the Fear and Greed Index. It's been worse. But at the same time, I'm seeing us sitting at this level, and I would not be averse. I wouldn't be surprised if we need to go back down to 15,500 and potentially lower in Q1, because the landscape in Q1 is not fundamentally going to change. We're still going to go into Q1 with Jerome Powell tackling inflation, with the Russia-Ukraine war, with all the normal headwinds which we still had throughout 2022. So I will be expecting more pain. I will be expecting more opportunities to dollar cost average, but it's not guaranteed. And this is the beauty of crypto. Anybody who tells you they know it all, they're lying. We don't. We just have to navigate with whatever data we've got in front of us and ultimately take risks and make decisions. That's what investing is about. Nobody has a full complement of data, and that is what makes investing both exciting but also rewarding. The fact that we need to read between the lines, we need to make informed decisions, we need to stack the cards in our favor, and then ultimately sit back and see how our investments do and learn from our previous mistakes and try to be a little bit better. Hope you guys enjoyed this video. Hopefully give you a bit of an insight into where we're actually at in the cycle, because sometimes it's really easy to lose perspective. If you appreciate this type of content, smash the likes and subscribe. Don't forget to check out my free TA course, Ijaz.uk/TA. Learn all these things. Learn technical analysis. Learn EMA ribbons, head and shoulders patterns. What is the inverse head and shoulders pattern? What's a cup and handle pattern? What's a rising wedge? What's a bullish engulfing candle? What's a bearish engulfing candle? Learn all of these things and more. Guys, don't forget to smash the likes, don't forget to subscribe, and I'll see you in the next one.